Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some bulletin board hero stocks on Thursday, July the 10th. And I'm starting off with Aminex, which, after a decent extended base towards the 50-day moving average, currently at 0.86 pence, and decent bullish divergence in the RSI window, we've got a break to the upside and likely break also of the 1 pence resistance over the past 3 months, all within a rising trend channel from March. The idea here really is that we'll head towards the top of the March channel and the 200-day moving average currently at 1.32 pence. The stop loss on the buy argument just below 0.86 pence or the 50-day moving average. Next up is Blinkx, where we've got a situation where bit of a stalemate after the big breakdown last week. I would like to see probably support come in or remain above the recent 31 pence zone ahead of a possible retest of the 45 pence intraday high of Thursday, which was obviously the big breakdown day. Another stock which has been in the wars recently is Monitise. Here we've got a rebound initially off the floor of a falling trend channel from September last year. That was just around the 38.5 pence level. Filled the gap and then came back on Wednesday. That would suggest that really, unless we see an end of day close back above the top of the gap, which was 47.3 pence, one would be selling into strength for a retest of the 40 pence level or just below. And if you disagree with a bear strategy, you'd be looking to buy just below 40 pence. A stock which seems to be on the radar for many people at the moment, which has sort of flared up, is Kea Petroleum. Here we've got an extended rebound off the floor of a rising trend channel from February. Probably what will happen now is that the former late June resistance at 1.68 will come in as end of day close support. There's also the 50-day moving average at 1.62 pence as well. There's a notional stop loss, and ahead of that we could see a best case scenario of 3 pence plus, which would retest March-April resistance. Another stock which is looking quite interesting at the moment is Edge Resources. I like the way that it's sort of bubbling under after bouncing off the floor of a rising trend channel from the end of December, and has broken up back above the rising 50-day moving average at 11 pence. Reminds me of the same setup of Rose Petroleum that we had a couple of days ago. So a partial or even full retest of the June resistance at 16 pence likely to be on the way over the next couple of weeks. Finishing off with one perennial favorite, and that comes in the form of Bowleven. Here, people still puzzled, presumably, by the lack of progress. The reason for this is probably the 200-day moving average running just below 40 pence. And in fact, I would say that it's probably easiest just to go for an end of day close above that level, rather than trying to work out when or if the shares are going to bounce in a comprehensive way. Obviously, there is support from the floor of this year's price channel at 36 pence as a possible bottom fishing area. But at the moment, it looks like the shares really want to consolidate that spike through 45 pence seen last month. That's it from me. More updates at spreadbetmagazine.com.